Welcome back, my dear students. In the previous lecture, I have completed about what we are going to learn in this introductory section. So as because this video is the very first lecture of this section. In this lecture today, I will be talking to you about basic understanding the technical analysis of financial market. This is the most important topic for you and understanding the market behavior by reading and analyzing the charts. Technical analysis also helps you in making your trade to be better positioned in comparison of doing just build your trade. It also helps you to know when to enter and exit the trade in order to make profit. So let's start. What is technical analysis? Technical analysis means that examining and predicting future price movement in the financial market. So you will be identify the previous market pattern and analyze the historical price movements, and then you will be able to determine the current trading condition and potential price movements. So in the financial market trading, the first thing comes to your mind, that is a chart. Chart is the graphical representation of price and volume movement of the certain period of time, and the easiest way for identify historical data and trend the market on a price action chart. In technical charts, you can look at historical data to market trends and patterns that will help you find some great opportunities for trade and take decision on certain price levels and chart patterns. You should understand the concept under technical analysis and study of price pattern on a particular assets. So there are many ways to identify pattern in the market, but some way will focus to you on the following. Chart patterns. Chart pattern is simply a specific formation on a price action chart that can be viewed as a trading signal and indication of future price movement. You can use trend lines and Fibonacci levels to identify well-known classical chart patterns. In these patterns give you clarity to the strength and weakness of buy-sell in the financial market. So you can try to read those patterns and then you will be better performer in the financial market. Candle patterns. Candle patterns are most useful on a price action chart. So you can use candle charts which display on the opening price, closing price, high and low price of a particular time frame and identify the behavior of buy-sell in a short period of time. As you can see the chart, you will notice that the hanging man candle pattern are formed and price goes to an upward direction. In this moment, you can trigger a long trade entry and take some sweet profit. These patterns are also important chart pattern in the technical analysis. I will discuss most important candle pattern in later lecture. Indicators. Indicators are the signal of market movement and you can use indicator for forecast the market condition. And you will understanding more about playing in the financial market. Indicators also help you to understanding the market behavior. Some indicators provide you the overbought and oversold signals, and other indicators provide you the rising and falling momentum in the market. So many ways to perform technical analysis of particular security. These kinds of analysis also used to help you identify the correct trading conditions and as well as possible point to enter and exit the trade. So not more today. Have a nice day. Goodbye.